Over the weekend, global market witnessed a sharp correction. The US market fell heavily, Nasdaq dropped 4% and S&P fell around 3%. Naturally, many investors are asking, why did the market fall? Will Indian market be crashed on Monday? Should I be worried? But let me tell you what I do usually. I usually don't spend much time worrying about why did the market fell. Because after understanding that reason, what exactly we are going to do? Nothing, right? The reason may change every week. One week it's like inflation, another week it might be the interest rate, then it can also be the election, then it can also be the AI boom or AI crash. Always geopolitics is playing. But my focus has always been on only one question. Because of this temporary fear, what opportunities are being created for a long-term investor? That is what helps us to make money. Not predicting headlines, not predicting tomorrow where the market will go, but identifying quality business available at the better prices because of this exact short-term panic. And this is exactly what we are going to do today. We will briefly understand what happened, then we will take a look at the opportunities currently emerging under our 52-week high-low strategy. Some of the stocks discussed last week may already have reached our GTD price. So if you missed the last video, please watch that after this video. Now let's get started. Before jumping into opportunities, let us see what are the three major reasons that triggered the fall. Strong US jobs data. The US economy added significantly more jobs than expected. Normally, that sounds like a good news, right? But market interpreted in a different way. Strong employment means inflation may remain higher for longer time, and if the inflation remains high, the US Federal Reserve may keep the interest rate at the elevated rate for longer time. And very obvious, market did not like that. The second reason came from AI rally. The trigger came from the technology sector. Broadcom's number and guidance raised a concern about whether the massive AI-driven rally can continue at the same pace or not. Whenever expectations become very high, even a good result can disappoint investors. Third, bond yields. US Treasury yields move sharply higher. Higher yields often create pressure on the growth and technology stocks. The result, heavy selling across US markets. Now, naturally this creates pressure on markets across the world, including India. What does this mean for India? In fact, GIFT Nifty was crashing after the Friday market close. Let us see it on the chart. If you see the GIFT Nifty after 3:30, let me go to the 5 minutes candle. I actually use daily candle, but for now I will use the 5 minutes candle to explain how much crash has happened. So Friday 3:30 our market got closed. And after that, it was consolidating after 8:55. After the US market got opened, you can see the fall from here to here. It is 1.5%, which is indicating 350 points down. We have to wait and watch on Monday 6:30 a.m. what GIFT Nifty is doing depending upon the weekend happenings. And technology stocks may see some temporary weakness because of the correction in US stocks. While RBI measures are supportive in the long term, meaningful foreign money flows generally return when the earnings growth improves. But again, this is only for the information, not an action plan. My concern is not predicting where Nifty will go, whether it will go up or down tomorrow. My concern is, are quality businesses becoming available at this better prices? That's where the opportunity lies. Let me repeat the motto of the channel: to help the ordinary people to become an extraordinary investor. And we do that with some simple frameworks. Not complicated predictions, not stock tips, not chasing news, simple repeatable frameworks. One of them is our 52-week high-low strategy. The idea is very simple. We buy quality business when they become temporarily unpopular and beaten down. Not because of business is broken, not because of financial is going down, and also not because of the management problem, but because of the market sentiment has turned negative. When fear is high, valuations become attractive, and when optimism returns, we sell at the better valuations. In simple words, buy quality when people don't want it. Sell quality when everyone actually are looking for it. If you have not watched the video where I explain how to select the stock, how much to invest, at what price to buy, at what price to sell, please watch that video after this one. The link will be in the description, or I will post the cards somewhere here. Let's jump into the opportunity section. Already we have seen the GIFT Nifty is like showing 350 points down, which means most of the Nifty 50 stocks might come to its 52 weeks low. Already we know how to find it. Go to screener.com, select Nifty 50 and go to the constituents and up from 52 week low. So if you have just sorted this, already we have seen Reliance Industries in last video, TCS in last video, ITC in last video, HDFC Bank also in last video, Bharati Airtel in last video, because they were in the range of 5% from 52 week low. Now we will consider what are the other stocks that has come to that range of 5%. In fact, HDFC Life Insurance, SBI Life Insurance and HTL Technologies and Hindustan Unilever. So those are in the region. M&M already we saw in the last week. Okay, so some of the stocks might have gone or some of the stocks might go next week because of this pullback, because of this crash that is going to happen on next week. It's up to you, because again I want to put a disclaimer, I am not a SEBI registered advisor. I do this for my educational purpose and my community's educational purpose, so I share it across with you for only educational purpose. All the decisions from the buy and sell you have to take depending on your own analysis. So let us get into the video with first stock of HDFC Life Insurance. Before going into the opportunity, I will hide last 1 month's chart, because as per the SEBI guidelines we should actually hide, okay, it should be day chart and last 1 month is like May 5th. Let me keep May 5th. Okay, so this replay means we are seeing data before 1 month. So we will go to HDFC Life. In that, already 52 week low indicator is applied. How to make use of this indicator to take buy and sell decisions, you go and watch the first video. There I have explained the stock selection, how to select the buy price, how to select the sell price and how much to invest, and what is that 1/5 strategy that a retailer can actually use it for managing his risk. Okay, so we'll learn it from that, but here we will see the high level opportunities. HDFC Life, already the 52 week low point is here. It has already touched last month. I don't know where the stock is currently trading, but for now, if it comes down here to this 52 week low of new point, also it is okay. But for me, it has already reached 52 week low point for a target of 52 week high. For example, if I would have bought as per the strategy here and it reaches this 38%, 40% profit in next 1.5 years, I'm completely satisfied, because it is more than FD, more than mutual fund, more than what I can do without a framework. So let us see the stock fundamentally. Fundamentally, stock P is 64. Yes, I would actually consider this is a border case, because I don't touch stocks which is actually having a P of more than 70. This 64, it's still okay. I have a confidence on this stock, because anybody and everybody who is selling the insurance is actually taking this premium HDFC life insurance, term insurance. Even many people from the allied community is considering. So I see a good future, but 70p is more, but right now it is 64. We can consider, it's depending upon your risk appetite. But I always compare the PE with the median PE of the same stock, which is 87.6, which is okay. ROCE is not that much commendable. ROE is also not that much commendable. Yes, we can give it as a last priority, because PE is also high and ROCE is also like kind of, I need at least 12% of ROCE. But considering the quality of the stock, if you go to the stock, it has reached 52 week low how many times after 2020? Why I am talking about 2020? Because that's where I started my stock market journey. In 2020, it has reached the 52 week low in the corona pressure, and this stock has reached the 52 week high, giving 86% of return in 127 days. And after that, it has reached first time here. It has not given pretty much good result, but ask one question. Do we take a trade only because of technical indicator is actually giving you a signal of buying? No, we always go and check the fundamentals. Let us go and take the fundamentals. 21 Jan 2022. So 21 Jan 2022. 21 Jan 2022. When I go to 10 year, 21 Jan 2022. Okay, somewhere here, 113. See, this is where the framework actually helps. Not only technical indicators, the fundamental knowledge and the risk management helps. If one person has followed the framework, whatever we teach, then actually you could have not taken the opportunity at 113 PE, where it is already more than 70 and more than 5-year median PE. See, this is how understanding the framework and practicing it is going to save most of the false opportunities that is shown. Okay, so we could have not taken this opportunity. I will remove this. And when the stock price came again here to 52-week low, 1st February 2023, let us go to 1st February 2023. Yes, see this. 1st February 2023, it has actually reached the PE below 70 and also it has reached below PE. If I could have taken this opportunity, what I could have done, I could have actually made a significant portion of money here, 26% in 135 days, just following the framework. And after that, 52-week low here and 52-week high here, 33% in 78 days, and it has not given opportunity till 52-week low. Now it has come. It's up to you how you see this. History will repeat or history will not repeat. It's up to your conviction. I am here to teach how to analyze a stock, how to observe the technical chart patterns that are actually communicating something to you. Okay. So from the fundamental point of view, we already saw something. Net debt to equity is less and pledged percentage is green. Public holding is less than 10%. It is down from 30% from 52-week high and down from all-time high also 30% for a large cap company. That is good. When I go to the profit and loss, it is not actually all-time sales. I agree, but it is 99,000 and 101,000. It's not going to be a big difference. And profit, right? It's all-time high. And when we go to quarter, yes, the sales is not high, but whenever it is taken on the March side, it might be less than what it has actually given in the last previous months. Maybe it is cyclic, but profit wise 497, it's okay. Again, see, we have to give some points to the stock which you are analyzing. What is the level of satisfaction? What is the level of conviction that we are getting? With respect to that score which is given by you, you can actually prioritize, because you will not have abundant money to invest in all the opportunities that you are getting. You have to prioritize depending upon your conviction and depending upon how the stock looks fundamentally and technically, and based on that you can take a decision. For this, I have little confidence on HDFC, so I will have to go ahead when it actually gives me opportunity as per strategy. So from HDFC Life point of view, you can give a score and take a decision based on that. Let us get into the next chart, SBI Life Insurance. SBI Life Insurance, if I go SBI Life Insurance in the chart, it is not near 52-week low, but when it is coming to 52-week low, we can also check SBI Life with respect to P, because whenever I see, for example, more than just below 200 DMA, I always see from all-time high, if it has fallen 20%, then okay. Otherwise, I will not take any large cap companies, because nature of the stock market, nature of all the large cap companies is to fall 20% and then regain the growth to the all-time high. Okay, so 20% is actually coming approximately to 52-week low before 1 month of chart data. But right now, that is okay if it comes 20% down, but if we go to the PE, it's 72. For now, I will stay back and watch it to go down, because when the PE is coming on the lower valuation of below 70, then I can actually start considering it. But from other aspect, if you go and see, balance sheet is good and profit and loss is like March 2026, it's not all-time high, but somehow it is actually around all-time high. Profit is all-time high. When you go to quarterly, yes, sales is not all-time high, but the shocking thing is, like, last quarter it is 46,000, right now it is 4,000. There might be definitely some kind of merger acquisition, some kind of corporate changes that would have influenced this. Otherwise, a company which is making a revenue of 20, 30, 40,000 will not come to 4,000. Definitely, I will understand this and make a separate video on this shortly. Currently, we are staying at a high level and how to understand some opportunities around 52-week high low. So right now, you can discount this SBI Life Insurance. If there is some knowledge in this corporate action, definitely I will put out a video soon. And right now, still the profit is near all-time high. Definitely, it is some kind of corporate action which I have to go and dig, because I am doing this video very candid with you. I am also finding the opportunity for me. So from the profit and loss of yearly, it is all-time high. Quarterly gives me some confusion which I have to analyze and then come back, which I will put out a short video on that. And already it's more than 72. For now it is strict no. When it is 70, when it is below 70, then we can start considering it. By that time I would have actually released what is the corporate action that is happening in SBI life insurance. Hope you understand. And what is the next stock? HCL Technologies. I think HCL Technologies, we have already done a video on it. I will attach the link in the description and you can go and watch it. When it gave the first opportunity, then I got that opportunity in my hand, and then I also made a video on it. Okay, again 1 month before itself it was near 52-week low. Now it is making new 52-week lows. That's always okay, because I always repeat, 4 things are in our control. 1, how to select the quality stocks in our control. What price we have to buy is in our control. What price we have to sell is also in our control. How much to buy is also in our control. That's why we go always 1/5 strategy, by strategically positioning ourselves in the quality stocks when it is giving opportunity, not going all in. Because any large cap company, worst case, we should have 5% maximum of our portfolio. Considering our portfolio is 10 lakh rupee, we should have only 50,000 in any large cap companies, but we should not put that 50,000 in one shot. It should be like 1/5 rule. When it gives first time opportunity, you can invest 1 to 2%. Then after that, when it falls down 10%, then put 1 more percentage. When it falls furthermore 10%, then put 1 more percentage. Like that, you can strategically position yourself in that stock so that you are neutralizing or averaging out when the stock gives good opportunity. Like that, HCL Technology gave the opportunity before 1 month itself. Then what happens after this? I might have explained that in my previous video about HCL Technologies. I would request you to go and watch that. But in high level, HCL Tech, if you see in the P18, 5-year PE, everything is marking green. ROC and ROCE is commendable. Balance sheet is good. Profit and loss is good. And quarterly profit is good. For more details, go and watch the video. I will attach the link in the description. And next stock is Hindustan Unilever, which is a great large cap company in FMCG. When you see, it has actually touched and then went up, and it might march towards the 52-week low. That's the nature of stock. And when you see in past, let me clear the drawing. When you see in the past before 2020, like it has not touched. When it touched the 52-week low, it has given the opportunity from here to here, 30% in 211 days. When it touched here to here, 16% in actually 152 days, and then where it touched 52-week low, then right now it is again touching the 52-week low. For example, if somebody would have taken the opportunity as per strategy from here and is going to get 30% of the return, maybe if it takes 1 year, 1.5 years, then also it is more than FD, then also it is more than mutual fund, then also it is more than somebody who is working without a framework. Okay, so right now this is a technical chart. Let us get into the fundamentals of the company. Hindustan Unilever. From my side, PE is 32, first green signal, and ROC is 28%, second, ROE is 31%, PE is, median PE is 55, which is also good. Debt, net debt, pledging, public holding, everything falls in my criteria. But from all-time high, it is 27% only, which is okay. For a large cap company to fall below 20% is also a green signal for me to consider that as an opportunity. From the balance sheet perspective, they are increasing the fixed asset from 54,000 to 57,000. So the company is expanding. The company can only expand when they see the future for them. And from the profit and sales perspective, 64,000 all-time high sales, and 18,000 before tax, 15,000 after tax is all-time high sales. From the quarterly perspective, yes, March is actually high than the last March of 15K of revenue, and from the profit perspective, 2,900 is actually higher than the last March of 2,400. So when we compare quarter to quarter, it is high. When we compare last quarter to this quarter, it is 6,000. I always check the other income here. Other income is 3,900, which is an exceptional income, one-time income. If you discount it, it is again 3,000 somewhere. 3,900, if you discount it from 6,600, it is coming around 2,800, which means sales is all-time high. From the quarterly perspective, profit is also all-time high. When you go to chart, if you see the PE ratio, it is suddenly fallen because of only one thing. PE is 32 because EPS is 64. If you see EPS is 64, don't get panic, because the EPS is coming from where? From this 3,900, because when there is a calculation taken for profit for PE, it is 2,800. excluding the exceptional income. But profit for earning per share, it is 6,600. That is a confusion where the PE actually earning per share is somewhere around 28 on last quarter and again back to 12 on this quarter. That's how, and that's why I always calculate PE on a different formula, that is market cap by net profit. So market cap is somewhere around 498, 466. Calculator 498, 466 divided by net profit of the company. If you go to the net profit, it is actually profit for PE is 15,000. But I will definitely discount the 3,900 here. So if I discount the 3,900, 15,000, what is the profit? 15,227, 227 minus 3,990. If I put, what is the 44? So 44 is the PE, which is as per my calculation, because I will exclude the exceptional income for the PE calculation. So 45 is also the nominal PE which was existing before. So if you exclude the exceptional income, then also it is 45, which is okay, below 70 and below median PE. Then I definitely can consider this an opportunity. When it comes to 52-week low, use a GTT method. If you're not aware what is GTT method, better I will create a playlist. Whenever I do any videos with respect to 52-week high-low strategy, I will put it in the playlist so that you can understand what is the strategy and how we have been using it week by week or month by month. So it becomes a go-to place for you to analyze the stocks with respect to this strategy and go back and see what are the decisions we made and what are the results that are actually created by this strategy in the future. So in summary, when the markets are falling, we, the people, are actually looking forward for the better opportunities. We covered Reliance, TCS, ITC, HDFC and M&M, Bharati Airtel on the last week. Today we covered HDFC Life Insurance, where ROE and ROCE were little bit not actually satisfactory, and SBI Life Insurance, where the net profit of a quarter gave us a surprise, and I will actually analyze and come back to you. But PE is already more than 70, so we will not consider that for now. And HCL Technology, where I have already done a detailed video. Please go and watch and get to know what is the thought process I am having towards HCL Technologies. And Hindustan Unilever, we have covered a bit well with respect to the PE, and the new concept you have learned today is like how to calculate the actual nominal PE excluding the exceptional income. If you have any doubts in this, please put it in the comment section. I will be happy to help you. If you have found value in this video, please go to the community using the link in the description and explore the community about the philosophy, the sessions we make internally, and the member feedback, where already few of the members have got benefit out of this community and what they have shared. Explore it, and if you want to join the community, press join the community button and fill up and submit the form. You will be getting access to be a part of a learner community in WhatsApp group. So what did we learn today? Markets corrected because of strong US jobs data, concerns around AI rally, rising bond yields. But the bigger question is not why did the market fall? The bigger question is what opportunities are being created because of this market fall. That mindset shift can alone change your investing journey forever. My overall investing thesis remains unchanged. Buy the quality business at the attractive valuation, allow time and valuation expansion to work in your favor. If you want to learn additional investing frameworks beyond the 52-week high-low strategy, comment cohort below. I will share the details about my next cohort, where I teach people on my personalized sessions. Also, this Sunday, we are conducting a special session where I will teach one of my favorite large cap investing strategies, a simple framework that serious learners can use for long-term wealth creation. You can visit the website using the link in the description, explore the community, read the feedback, understand what we actually do in the community, and how do we help ordinary people to become an extraordinary investor. If you found value in this video, please like, share and subscribe. And if this video helped you to think differently about the market correction, leave a comment below. That one small gesture motivates me to keep creating more content and sharing more frameworks. Thank you for your time. As always, thank you for your patience. Happy investing.